I am going to go ahead and get started, and people can still trickle in while I am welcoming everyone. So I just want to say hello. Welcome to today's webinar. On behalf of the National Transit Institute, I warmly welcome you and thank you so much for participating. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. Today's webinar is National Transit Database, Annual Reduced Reporting in the Urban module. We're pleased to have as our presenters today Brandon Parker and Jason Kaspick. Brandon Parker is a validation analyst with the National Transit Database team. Since 2017, Brandon has primarily supported data validation and technical assistance for urban agencies reporting to the NTD. Jason Kaspick is a senior validation analyst with the National Transit Database team. Jason joined the team in 2016 and has also primarily supported data validation and technical assistance for urban agencies reporting to the NTD. So just so you know, today's session should run about an hour to an hour and a half. You can ask your questions anytime by typing them into the Q&A box. And you can enable the Q&A by clicking on the Q&A box on the Zoom controls, which is most likely at the bottom of your screen. You may need to hover your mouse to make it appear. Feel free to make comments and share ideas in the chat box, but just note that questions asked in the chat box might be missed, so please put all your questions in the Q&A box. So the link to the handouts was sent out earlier, but if anyone missed that email, in just a few moments, I'm going to paste it into the chat box. And for now, I will turn over the presentation to Brandon and Jason.
Thank you, Erica. Good afternoon, everyone, and welcome to the National Transit Database webinar for Reduced Reporters. Thank you very much for joining us today. Here is the contact information for the National Transit Database. If at any point you require technical assistance while completing your report or accessing our published data products, please feel free to call or email our help desk line between 8 a.m. and 7 p.m. Eastern Time. My name is Jason Kaspick, and I am joined here by Brandon Parker, who will also be presenting today. Our contact information is listed here if you have any questions about this presentation, or you can also contact your assigned analyst. Here is the agenda for this afternoon. We will review the basic policies of NTD reporting, including a reporting overview, as well as touching on some policy clarifications and new requirements for this year. We will then discuss how to get started in the NTD 2.0 reporting system, how to kick off and complete the annual report, how to submit the report through the system, and we will briefly review the validation and revision process. First, we will begin with an overview of the NTD. Who reports to the NTD? Agencies that are recipients or beneficiaries of FTA 5307 Urbanized Area Formula Program funds or FTA 5311 Rural Area Formula Program funds are required to report to the NTD. In 2018, with the implementation of the new TAM rule, any recipient of FTA Chapter 53 funds are required to report to the NTD if they operate public transit. These agencies are public transportation providers that may include direct transit providers, state departments of transportation and their subrecipients, as well as metropolitan planning organizations or NPOs. Transit agencies are welcome to report their public transit data to the NTD on a voluntary basis, even if they do not currently receive these funds. The data from these reports contributes to apportionments for the urbanized areas or UZAs. Within the urban module of the NTD, reduced reporters are transit agencies who operate 30 or fewer vehicles in their peak maximum service. They also do not operate on any fixed guideway, such as rail or fixed catenary systems. For those who report as a reduced reporter, these agencies do not report data related to passenger miles in their service. They also do not report monthly service statistics or monthly safety data. Agencies have 4 months after their fiscal year ends to complete their NTD reports. For example, if your fiscal year ends on June 30th, the deadline for submission is October 31st, and the report must be closed out or finalized by March 15th of the following year. We have 3 primary groups of fiscal year reporting deadlines listed here in the table. Next, we will cover what to report. Agencies must report all public transportation services, whether they are operated by your agency directly or contracted out as public transportation. Public transit must be regular, continuing, shared ride, and open to the public or a segment of the public, such as seniors or persons with disabilities. Report all assets, expenditures, and service data associated with these services. In your financial data, you should report the total annual cost of your service, regardless of whether it was federally or locally funded. And you should only report services for which your agency is responsible for covering the full cost. You must report data that is specific to each mode and type of service you operate, such as bus, demand response, van pool, and so on. Be sure to collect and report service and financial data by each separate mode. Additionally, ensure you report actual data rather than data that is based on calculations or estimates. Report all direct as well as indirect expenses related to the service, also regardless of funding source. Here's the general flow of the NTD reporting process. All agencies begin with training and familiarizing themselves with the NTD policy manual. They then collect and compile their data once their fiscal year ends. They enter it into the NTD system and submit their first report. And then their assigned analyst will review the data and send it back with revisions or requested clarifications. Once the report is finalized, it is sent to FTA for approval. The data is used in the apportionment formula funding the following year, and the data is eventually published on the NTD website for the general public to use. There are some key reference documents available online. These include the NTD Glossary, Annual Reporting User Guide, Reduced Reporting Policy Manual, and the Uniform System of Accounts, or USOA. We have also compiled a frequently asked questions page, which you can find on our homepage. If you have any suggestions for the FAQ page, please feel free to reach out to your analyst. Next, we will discuss the changes and clarifications for 2020's report year. So this is the clarifications during the ongoing emergency. Emergency services carried out by transit operators in coordination with medical centers or emergency medical management agencies in response to COVID-19 do not meet the FTA definition of public transportation. Non-passenger services that your agency provides under contract, which do not involve the transport of passengers, such as a meal delivery program, do not meet the FTA definition of public transportation. If your agency provides emergency services that you believe may be reportable, please contact your assigned NTD analyst to discuss the reporting eligibility of these services. We understand some agencies received CARES Act funds to support these services. They are still not reportable to NTD. Collecting data on board vehicles has been a challenge during the COVID-19 pandemic. On March 25th, 2020, FTA requested that agencies suspend their NTD sampling activities if those activities involved onboard data collectors or ride checkers. On June 25th, FTA announced a new policy regarding sampling. Please see the COVID-19 reporting guide if you are using ride checkers to sample for unlinked passenger trips, or UPT. Now to discuss social distancing in revenue service. FTA requires agencies to provide shared rides for the service to be considered public transportation. Many van pools and other ride-sharing services have limited the number of passengers allowed in the vehicle at one time as a safety measure during the ongoing emergency to adhere to social distancing regulations. Agencies may still report these public transportation services even if ride-sharing has been temporarily suspended during the emergency. Temporarily suspended means there is an expected return to normal operations. No long-term changes in the format of the service. Generally, for ride-sharing services that are purchased, we would see the same details on the B30 contractual relationship form. Some agencies may be double-heading vehicles. This is when an agency operates extra vehicles in revenue service because social distancing requirements have reduced the capacities of individual vehicles. For reporting regularly scheduled double-heading vehicles, report the miles and hours traveled by vehicles along the assigned route as revenue service in your agency's annual report. For reporting double-heading vehicles dispatched daily, report the miles and hours those vehicles spend in route service in your agency's annual report. When transit agencies notice that crowded vehicles are passing by passengers on the same trips every day, the agency schedules a double-header vehicle or shadow service for those trips. This means that a second vehicle is added to operate in tandem with the scheduled vehicle. Passenger timetables remain unchanged. The only difference is that two vehicles instead of one arrive at the scheduled time on the route. Some agencies may be using floating vehicles. These are vehicles on standby at key service locations to provide immediate response to the problems related to passenger capacity. Report miles and hours data if a floating vehicle is dispatched to provide immediate response to problems related to passenger capacity. Do not report miles and hours data if a floater vehicle is not dispatched. This is because the vehicles did not provide revenue service. For seating and standing capacity, if you are adding vehicles during the year, you should report seating and standing capacity as you would have per normal operating standards, i.e. before the pandemic. Please do not update the seating or standing capacity to reflect any temporary capacity changes made in response to the pandemic. The Coronavirus Aid, Relief, and Economic Security, or CARES Act, provides emergency assistance and healthcare response for individuals, families, and businesses affected by the COVID-19 pandemic. Report funding used for normal transit-related expenses as CARES Act funds, 5307 or 5311, on the reduced reporting RR20 form. Report funding used for extraordinary and special expenses as extraordinary and special funding in the federal funding section. Add CARES Act funding plus a brief description in the corresponding text box. Now we'll cover some changes to the reporting system. The first is a change to the system layout, which will take effect when annual reporting for 2020 launches. These are high-level layout changes within the Appian reporting tool that are designed to make navigation more efficient within the NTD application. If you are a system user now, you may be aware that there is an updated homepage in the Appian system, and this is a reminder that selecting NTD as a favorite application by clicking the star will allow users to bypass the homepage at each login unless there is an unread announcement that is required before navigating into the NTD site. Once you have clicked on the NTD site, you will be taken to the screen shown here. The first thing you will notice a slightly updated banner at the top. The news feed has been replaced by a home tab, which includes annual report packages, and for full reporters, monthly ridership and monthly safety report packages as well. The general presentation of the forms within these packages has not changed, but we hope this reduces the time spent on navigation. The last module here is your agency's profile, which includes the basic information that can be modified at any time and should be updated routinely as changes to address, users on the report, or modes and types of service operated are changed. Speaking of types of service, the next most significant change is the types of service available on the modes P20 form. This will only affect users who either contract with taxi cab operators or contract with transportation network companies to provide on-demand or demand response mode service. As these types of contractual relationships have increased, FTA modified its reporting system through a Federal Register notice published April 9, 2019 to further stratify public transportation by the type of service provided. Directly operated service, or DO, remains the type of service to select for a mode when the transit agency is the operator of the mode. FTA requires agencies contracting for public transportation with transportation network companies to report the service if it meets the definition of public transportation. A new type of service, transportation network company, has been added for that purpose. Agencies which are contracting with taxi cab operators using the taxi operator's non-dedicated vehicles must now report those services as TX type of service. To review, FTA defined TNC in 2019 and provided discussion on this type of service in its reporting manual, including examples in Appendix E of the 2020 Reporting Policy Manual. Again, report year 2020 is the first annual report year that this takes effect in the reporting system. If your agency has an agreement with this type of company, you must update the type of service for your demand response mode to show TN, and we strongly advise you to coordinate this effort with your NTD analyst. In contrast, the addition of the taxi or TX type of service is replacing an existing mode, demand response taxi. Previously, agencies did not need to make changes to this type of service. The migration is scheduled to happen in the week before the reporting system opens for report year 2020. This means when FTA launches forms for 2020 in September, if your agency previously reported a demand taxi mode with purchase transportation type of service, you will now see that reflected as demand response mode taxi type of service, or DRTX on your report. You do not need to, and in fact you should avoid making these changes yourself if you're tax reported before 2020. To demonstrate how this will look on the P20 form, please see this image. The TN type of service is shown here. The taxi type of service is shown here. The next slide covers the TAM Phase-In Schedule. As you see for report year 20, everything that was required last year is still required. This goes for setting and reporting internal targets, submitting a narrative report, and condition data on vehicles. The change for report year 2020 is that you must now report condition data for 75% of your facilities on the A15. This was increased from 50% during the last report year. Now we will cover the NTD 2.0 reporting system. This is the NTD homepage for those who aren't familiar. It's transit.dot.gov/NTD. There are two links on this page that will allow you to access the reporting system, one on the left and one on the middle right of the page. Once you log in, you will land on the home screen. You will see announcements from the NTD team here, as well as be able to set a default system by clicking on the star. From the home screen, you can access your annual report and your agency's profile. The agency profile section is a frequently assessed part of the NTD system. This houses data that typically doesn't change from year to year, such as your basic information, the modes you operate, the users who need to have access to the report, and any historical reports. To find the profile, click Home and then click on Profile. Next, you will see your agency's profile link. When you click on the link, you will then land on the profile summary page. This page contains your analyst name, phone number, and email address, as well as your agency's basic information. At the top of the profile section, the e-file library contains historical requests like extension requests or agency fiscal year updates. The form library contains the agency's reports from previous years. If you need to access the 2019 report for reference while completing the 2020 report, do this through the form library. Related Actions allows you to edit your agency's profile information, like your basic information, modes, and users. To edit your modes, select Related Actions and then select the View and Manage Reporter Modes link for the P20 form. If you'd like to add a new mode to your agency profile, select Add Mode at the bottom of the screen. You will not need to add the same mode year over year, as this data will be retained in the system. Select the mode from the drop-down menu, such as bus, demand response, etc. Select whether the service is directly operated by your agency or contracted out as purchase transportation. Enter the commitment date, which is when your agency first committed capital funds towards the mode, and enter the start date, which is the first day of revenue service. Do not enter an end date if this service is still in operation. Only enter an end date if the service has been terminated. Please note that agencies cannot delete modes from the profile once they have been added. You may edit modes directly in this form by selecting the field you wish to update. You may add an end date if the service has ceased operations or update the commitment or start dates as needed. Lastly, review the user roles for agency users in the NTD system. The user roles are as follows: CEO, NTD contact, editor, viewer, and CEO delegate if applicable. The CEO delegate role is optional for all agencies and requires FTA approval. CEOs and CEO delegates have the highest level of access and permissions in the system, including the ability to create reporter requests like waivers and extension requests. CEOs have the ability to submit the report, as well as view and edit report forms and issues. NTD contacts have the same permissions as CEOs, aside from creating reporter requests and submitting the original submission, or first draft of the report. Editors may only revise and save forms, while viewers may only view the forms. You may disregard the safety roles like safety contact or safety editor, as urban reduced reporters do not report safety data through the safety module. Beginning in calendar year 2019, reporters have had to certify all of their users when they began the report. All user managers must do this. This is consistent on all FTA FACES applications, such as TRAMS and ECHO. Please consult the FACES user guide on FTA's program website for more information. Next, we will jump into starting the report year. The first step in completing the annual report is completing the report year kickoff. This process officially launches the current report year. After your fiscal year ends, your agency CEO and NTD contact will receive a task in the system to complete the kickoff. This process will generate the report package for the year after you confirm your agency's information. First, the CEO or NTD contact will select the Task tab. You will complete the 2021 report year kickoff in order to generate the 2020 report package forms. You will first need to accept the task and then hit Proceed. The first step in this process is confirming or editing your users for the year. You can add users or edit existing contact information as needed. The next step is confirming or editing your agency's modes for the year. You can add new modes if you started a new service or end modes if your service has ceased in the prior year. Please do not update this section to reflect your fiscal year. This is a common reporting mistake. The next step is managing your transit asset management group plan. Sponsor. If you are participating in a group plan, confirm your sponsor. If you are completing your own transit asset management plan, you can simply click Continue. If you need to remove the sponsor from the last year or select a new one, please contact your analyst. Next, you will confirm your reporter type for 2020. If you were a small systems reporter last year, ensure that No is selected under Change Type, as your reporter type will not be changing. Select the same answer for your 2021 reporter type. Then select Submit to continue the kickoff, complete the kickoff. This will generate your 2020 report package forms. The system typically takes a couple minutes to complete this function, so be sure to check your forms after allowing a little time. Next, we will review annual form navigation in the reporting system. To access your 2020 report package, first select Home at the top of the page, then Annual. Select the 2020 report package link. Once the report package summary page opens, select Annual Forms in the top right-hand corner. This will open the list of report package forms. You can select any form link to open it. This is the list of forms you will see in your report package, which we will review one by one. Now, I will turn the presentation over to Brandon.
And while that's getting set up, I just want to let folks know, since we've got a lot of good questions and answers in the Q&A, what I will do is create a link and we'll send that out to all participants as well so they can see all the questions that were asked and the answers to those questions as well. So we'll make sure everybody has those as well.
The first form in each report package is the B10 identification form. The first step on this form is to select your agency's organization type from the drop-down menu. Examples of available organization types include city, county, or local government unit, or independent public agency or authority of transit service. After you have selected your agency's organization type, you will report your demographic information. This includes service area square miles and service area population. The data points for service areas should represent your agency's true service area for transit and not the data for your particular urbanized area. To complete your demographic information, you will report data related to your urbanized areas, or UZAs. Your primary UZA will be pre-populated in the form. You can add secondary urbanized areas as applicable by clicking the Add UZA button. If your agency has any modes that will be captured in another entity report, you will report them in the Modes Filing Separately section. If this does not apply to your agency, please leave this section blank. Lastly, if your agency owns capital assets that are used in another entity's report or service, you will report the agency where they are used in the separate asset section of the B10 form. Again, if this does not apply to your agency, please leave this section blank. Next, we will cover the B30 contractual relationship form. The B30 form captures information about contractual relationships. These are relationships where transit service is provided to an agency or government unit from a public or private transportation provider based on a written contract. The buyer of service will be the transit agency that pays another entity to perform service. Please note, if the buyer of service only pays a portion of the cost to operate service, it should not be reported as a contract. The seller of service will be the entity that provides service on behalf of another agency. The seller may be a public or private entity. The NTD has specific criteria for service that may be reported as a contract. The criteria are as follows. A written agreement exists that, number one, obligates the seller to provide their operations for a specific monetary consideration. Number two, specifies a contractual relationship for a certain time period and service. Number three, obligates the seller to provide to the buyer the operating statistics required by the NTD annual report. And number four, the authorized representatives of both the buyer and seller sign the written agreement. Buyers must pay the full cost of service in order to report the service as a contract to the NTD. Also, the service must be branded under the transit agency buying the service. In order to add a B30 form to your report package, you will click on the Add Contractual Relationship button at the top of your report package summary dashboard. All B30s from previous report years will generate during your report year kickoff as part of your report package. Since report year 2018, there are two types of B30 forms, one for van pool modes and one for non-van pool modes. Once you have selected Add Contractual Relationship, the first step is to select whether the contractual relationship is with another agency who reports to the NTD or is a private company. Then you will click Continue. If your B30 is with another NTD reporter, you must select the contracted agency from a list generated by the NTD database. You can also search for the provider in the search bar. At the top of the B30 form is the contract summary. The first selection to make is your contractual position. This indicates whether your agency is a buyer of service or seller of service. Once you have selected your position, you will report whether the contract was negotiated or competitively bid. This should refer to when the contract was awarded, even if the option years have been exercised. Then, you will select the primary feature of the contract, or how does the buyer compensate the seller. There are two options. The buyer pays the seller a negotiated fixed rate per unit of service, or the buyer reimburses the seller net operating expenses based on their approved budget. You will select one of these options from the drop-down menu. Next, you will indicate whether the service statistics will be reported in your NTD report or in another NTD report. If you are reporting the service data in your own NTD report, select the In This Report option. If another NTD reporting agency will be capturing the service data provided in the contract, select In Another Report. Then you will indicate whether the seller keeps the fares or the seller returns the fares collected to the buyer. The last selection for the contract summary is to indicate any public assets provided to the seller by the buyer, if applicable. These may be vehicles, maintenance facilities, or other public assets. If you select Other, you will be required to provide a description of the public assets provided. The next section of the B30 form is where you will add each mode provided as a part of the contract. These modes do not carry over from year to year and must be added to your B30 form each new report year. You may only add active modes from your P20 form or modes listed as filing separately on your B10 form. You will click the Add New Mode and Type of Service button at the bottom left of the form to add modes. Then you'll select the appropriate mode and type of service from the dropdown and click Edit on the right-hand column to open up the Key Financial and Operating Statistics field. There are several parts to the Key Financial and Operating Statistics section. First, you will report the number of vehicles operated at maximum service, or VOMs. This should represent the highest number of vehicles operated at any given point during the year, excluding special events or atypical service dates. Then you will indicate how many months the seller provided service during the report year. Next, you will report the amount of fare revenues generated by the service. You should report the total amount of fares collected regardless of whether the buyer or seller returned the fares. Then you will report the total payment to the contractor in the direct payment line. This should be the total amount paid directly from the buyer to the seller without netting out any capital leasing or other expenses. Next, you will indicate the amount of capital leasing expenses for the contract. Capital leasing costs are expenses that the seller charges the buyer for use of his capital assets, such as vehicles or maintenance facilities. If the buyer provides all the assets, this does not apply. If you are the buyer of service, you will record any costs your agency incurs for overseeing the contract under the Other Operating Expenses Incurred by the Buyer field. This should include general administration costs to oversee the contract and any other applicable expenses. Lastly, you will report any leases and rental expenses in the Other Reconciling Item expenses incurred by the buyer field. This will be for expenses such as vehicle rentals. The next form we will review is the A10 Stations and Maintenance Facilities form. On this form, you will begin by reporting data on your agency's passenger stations. You will report the number of ADA accessible and non-accessible stations, as well as the number of elevators and escalators in your stations. Passenger stations must be significant structures with separate rights-of-way in order to be reportable. Please note, bus stops or bus shelters do not count as passenger stations. Next, you will report a count of your agency's maintenance facilities used to support revenue service. This will include any owned or leased maintenance facilities. You will report the facilities by the ownership type, facility type, and capacity. If your agency uses one maintenance facility for multiple modes, you will need to prorate the facility based on the amount of vehicles it serves. For example, if an agency operates a demand response mode and a bus mode that use the same maintenance facility, this facility will need to be prorated between the A10 forms for each mode. If the agency owns 20 vehicles total, 15 of which are used for demand response and 5 of which are used for bus, the demand response A10 form will reflect 75% of the facility, and the bus A10 form will reflect 25% of the facility. This is determined by taking the number of vehicles for each mode and dividing by the total number of vehicles for all modes. Now we'll talk about the A15 Facilities Inventory form. In the Transit Asset Management Facilities Inventory, or A15 form, you will report all administrative and maintenance facilities for which you have capital replacement responsibility and greater than incidental use, as well as all passenger facilities that your agency uses in revenue service, regardless of capital replacement responsibility. A few common examples of facility types are administrative buildings, which are the offices that house executive management and supporting activities for transit operations, combined administrative and maintenance facilities, which are facilities that combine the functions of both an administrative and maintenance facility, and finally, maintenance facilities. These are facilities where routine and heavy maintenance on vehicles is performed. When adding a new facility to the A15 form, you will need to complete all required fields, which we will review. To get started, click Add New. There will be 3 sections to fill out for each facility: facility information, condition assessment, and address. Clicking Add New will first bring you to the Update Facility Information section, where you will click on Add Facility. Next, you'll fill out the name of the facility. You can name it whatever you like that makes it easily identifiable to you. Then you will fill out the primary mode that the facility serves. If the facility serves more than one mode, you should choose a primary mode that it predominantly serves, and in the next field, you can identify any other modes served as a secondary mode. Secondary modes should be added for any other modes that the facility serves, or it can be left blank if it does not serve any other mode. The secondary mode field is not a drop-down menu, so you will need to start typing before options appear. Next, you can identify any private modes that share the use of the facility. The options for these non-public transit modes are airport, private bus, private rail, and private water transit. An example of private bus would be Greyhound, or an example of private rail would be Amtrak. Here you would choose the facility type from the drop-down menu. You should select the facility type that fits your facility best. A list of facility type descriptions is available in the policy manual starting on page 97. If you have questions about which facility type you should select, please contact your analyst. You will then report the year that the facility was built or reconstructed, the square footage, number of parking spaces, percentage of your agency's capital responsibility, and any notes you deem necessary. Next, you should click Continue to go to the Condition Assessment section of the form. Here you will report the condition assessment for the facility on a scale of 1 to 5, with 5 being excellent and 1 being poor. If you do not have a condition assessment for the facility, please select NA from the drop-down menu. If you would like guidance on how to complete a condition assessment, please refer to the TAM Facility Performance Measure Reporting Guidebook, which can be found on the NTD's website. Once you have selected the condition assessment rating, you should select the estimated date on which you conducted this assessment. Lastly, you should click on the Update Address tab or click Continue to fill out the facility's address information. You may report either the street address of the facility or the latitude and longitude. Once all the information has been added, you can click Continue to add the facility to your A15 form. You can review or edit any information for any of the facilities by clicking on the facility name from the main A15 landing summary page. Now we will review the A30 Revenue Vehicle Inventory Form. Each year, you should review and update the A30 form by adding any new vehicles or retiring any vehicles that are no longer in service at your agency. The form will pre-populate all revenue vehicle fleets from the previous report year. If you need to add a fleet, you will select the Add New Fleet button. First, you will report the basic information about the fleet. If there are multiple vehicles in a fleet, these vehicles should be identical across all specifications. You will select the vehicle type from a drop-down menu of options. Then you will report the number of total vehicles and active vehicles in the fleet. Active vehicles should include all vehicles that are available to provide revenue service, including spares. Next, you will select the ownership type. This includes options such as owned or leased, and whether the vehicles are owned or leased by a public agency or private entity. Then you will select the funding type. This should represent the largest funding source for the vehicle fleet. There are several options for funding type, including FTA grant programs, other federal funds, and non-federal funds. If you do not have capital responsibility for the fleet, you should check the No Capital Replacement Responsibility box. If vehicles in a fleet can operate without any human input, you should check the Automated or Autonomous Vehicles box. This election will not apply to the majority of reporters. Once you have entered the basic information, you report the vehicle information. This includes the fleet's model, length, seating and standing capacity, fuel type, manufacturer, and year manufactured. Some vehicles may have multiple manufacturers. Agencies must report the final manufacturer and model. For example, for a cutaway vehicle, you should report the cutaway body manufacturer and model, since that is the final manufacturer of the vehicle. You should not report the manufacturer and model of the vehicle's chassis. If you have questions about how to report these data points for your fleet, please contact your analyst for guidance. As a note, if your agency reports a year rebuilt for a vehicle fleet, you will also now be required to indicate the type of rebuild that was performed. In each vehicle fleet, you will see useful life benchmark as well as useful life remaining in the vehicle information section. Useful life benchmark is the expected life cycle or the acceptable period of use in service for an asset, as determined by your agency or the default benchmark provided by FTA. Please note that this measure takes into account your unique operating environment, including your geographic location, the frequency of your service, and your climate. Because of this, useful life benchmark is not the same as useful life for FTA grant programs, which typically defines the minimum age at which equipment can be retired. Useful life benchmark will automatically populate a default value when you select the vehicle type. For example, the vehicle type for this fleet is selected as bus. The standard useful life benchmark for buses as defined by FTA is 14 years. Thus, a value of 14 will populate in this field. Agencies have the option to report a value that is different from the default. Useful life remaining will automatically populate once you report the year a fleet was manufactured. In this example, since this fleet was manufactured in 2014, it has been in service for 6 years as of 2020. If the useful life benchmark for buses is 14 years, then this fleet will have 8 useful life years remaining. Please note the useful life remaining is not an editable field. This value is calculated based on the year manufacture in the useful life benchmark field. Lastly, you will report the mileage information. This includes miles this year, which should reflect all mileage incurred by the fleet during the fiscal year, and average lifetime miles, which is the average total mileage per active vehicle in the fleet. Average lifetime miles can be calculated for the current report year in 2 ways. If the prior year's average lifetime miles were accurate, you can divide the miles this year value by the number of active vehicles in your fleet and add that result to the previous year's average lifetime miles. Otherwise, you can simply take the average of all ending odometer readings for the active vehicles in the fleet if the odometers have worked properly for the vehicles. If you need to edit an existing fleet, you will first click on the link of the fleet's revenue vehicle inventory, or RVID. This will open a drop-down where you will then be able to update any fields if necessary. A new feature that was added in report year 2017 is the ability to add an existing fleet onto your 830 form. For agencies that share fleets between modes, you will now be able to copy fleets from one 830 to another by selecting the Add Existing Fleet option. The system will populate all fleets that may be shared between modes. If a fleet is no longer in service and needs to be retired, you should not delete the fleet from the 830 form. What you should do is change your active vehicle's value to 0 and then select Yes for the Is this fleet retired question that will pop up in the bottom right-hand corner of your fleet details. If a fleet is out for repairs and will be coming back into service, you should still update active vehicle to 0, but you should select No to the Is this fleet retired question. Fleets should only be deleted from the 830 if they were accidentally added to the report. If needed, you can delete a fleet by clicking on the red X next to the fleet entry. Next, we will cover the 835 service vehicle inventory form. The 835 form is where you report your agency's non-revenue vehicles that support your service. You should report all service vehicles for which your agency has capital responsibility. Service vehicles are roadworthy, self-prepared, or major pieces of construction equipment that support revenue operations, maintain revenue vehicles, or perform transit-oriented administrative activities. Similar to the 830 form, you can group service vehicle fleets by vehicles that are identical across all specifications. Service vehicles are grouped into 3 vehicle types: automobiles, trucks and other rubber-tired vehicles, and steel wheel vehicles. This form is not specific to mode, so you will only be required to complete one 835 form. To add a new service fleet, first click Add New. Then click Add Service Fleet at the bottom left-hand side of the form. The first section of fleet information is the Service Fleet Information tab. You will report the fleet name and agency fleet ID. These can be names and IDs that make the fleet easily identifiable for your agency. Similar to facilities on the 815 form, you must select the primary mode that the fleet supports. You can also report secondary modes as applicable. Then, you will select the vehicle type for the fleet from the drop-down menu. Descriptions of these 3 vehicle types are available in the policy manual starting on page 119. Next, you will enter the number of total vehicles in the fleet. The useful life benchmark field will populate when you select the vehicle type. You may choose to enter your own figure in the useful life benchmark field. Now, report the year that the fleet was manufactured and any notes as needed. Click Next Section to go to the next page. This is where you will report your agency's capital responsibility percentage for the fleet. Lastly, enter the estimated cost for the vehicle's fleet in the year dollars of estimated cost. For the estimated cost, you should report the full cost to replace the fleet, including soft costs such as financing charges. This value should be the most recent value the agency has, whether that is the original cost of the assets or the insured value. The year dollars of estimated cost figure means the year that your estimate is from. If you are using the original cost of the asset and was purchased in 2012, your year dollars would be 2012. Next is the A90 Performance Measure Targets form. On the A90 form, you will report targets for your asset performance in the upcoming fiscal year. This form compares data from the current report year asset forms to the targets entered in the prior report year. You are also required to submit a narrative report that outlines your agency's progress towards your performance target. The narrative report is required for report year 2020 for all agencies with their own TAM plan and for group plan sponsors. This document will be attached at the bottom of the A90 form. The document should outline your agency's progress towards the targets you set for 2020 and any conditions during the year that affected your progress. There is no prescribed format for this narrative. If you have any questions, please contact your analyst who can provide more resources. These are the categories that you will see in the A90 form. These sections are broken down into equipment, which represents service vehicles, rolling stock, which represents revenue vehicles, facilities, which represents your passenger station and other administrative or maintenance facilities, and infrastructure, which doesn't apply to these reporters as it pertains to rail. In the first section of the A90, you will report the target percentage of revenue vehicles that will have met or exceeded their useful life benchmark by 2021. The list of vehicle types will populate based on your active modes. If any vehicle type does not apply to your agency, you can check the NA checkbox in the right-hand column, and that row will be grayed out. In the equipment section, you will report the percentage of service vehicles that will have met or exceeded their useful life benchmark in 2021. Again, check NA for service vehicle types that your agency does not operate. In the facility section, you will report the target percentage of facilities that will rate below a 3 on the Transit Economics Requirement Model, or TAM scale, in 2021. Check the NA box if a facility type does not apply to your agency. At the bottom of the A90, you will upload your agency's native report. You can upload the native report in most file formats. Now we will cover the RR20 Reduced Reporting Form. This form will include financial, service, and safety data. There are several sections on the RR20 form, including fair revenues and directly generated funds, revenues accrued through a TT agreement, non-federal funds, federal government funds, service data, and safety data. The first section is where you report your financial data. First, you report the total annual expenses by mode and type of service. This should include all funds expended towards your public transit service. You will separate expenses by funds expended on operations and funds expended on capital. Please note, capital leasing expenses should not be included in either of these totals if you have a B30 form. In that case, the total funds expended at the top of the form will not match the sum of funds expended by mode and type of service, which you enter here. Next, you will report fair revenues by mode and type of service. Fair revenues should include all income received directly from passengers, including cash or prepaid tickets, reduced or subsidized fares, donations made on board the vehicle, and any organization fares such as agreements arranged by colleges or universities. With the updated USOA in effect since report year 2018, agencies are required to report fair revenues in two categories: passenger paid fares and organization paid fares. Passenger paid fares consist of direct fares including payments such as full adult fares or senior citizen fares. Organization paid fares include fares earned from organizations for providing transit service, such as universities, reduced fare reimbursements, or other special contract transit fares. You will then report the total of other directly generated funds in the next section. Some examples of other directly generated funds are advertising revenues, fundraisers, park and ride revenues, or interest on investments. You must provide a detailed description of the funds reported in this section. Agencies should also include donations and insurance recoveries in this field. Insurance recoveries should include any insurance payouts, dividends or rebates, and funds that may be netted out towards future bills. The next section on this form is for PT agreement revenues, or revenues accrued through a purchase transportation agreement. You should only report a value in this field if your purchase transportation agreement meets NTD criteria for a full cost contract. This field is for revenues accrued by the seller of transportation services. This will not include passenger fares generated by the service. You shall only report a value in this field if you are the seller or operator of purchase transportation. If this field applies to your agency, it will indicate whether the revenues came from another entity reporting agency or a non-entity reporting agency. Next, you will report your non-federal funds. This includes local funds, state funds, and other funds. If you report funds under other, you will be required to provide a detailed description of the source of funding. The last portion of the financial data section is federal funds. You will first select the applicable federal funding sources on the left side of the form. Once you do so, fields will populate on the right side of the form for data entry. Once you have determined the appropriate sources, you will enter the data for each federal funding source. As a reminder, you will need to report funds expended on operations and funds expended on capital in separate columns. Please note, If you select another option, such as other FTA funds, other USDOT funds, or other federal funds, you will be required to provide a description of the original source program. Some examples of these other sources may be FHWA funds or Medicaid funds. Next, you will report service data. You are required to report annual vehicle revenue miles, annual vehicle revenue hours, annual unlinked passenger trips, sponsored trips for demand response and demand taxi modes, and vehicles operated at maximum service. Vehicle revenue miles and hours should include the miles and hours when the vehicle is in revenue service and the miles and hours incurred during layover and recovery time. Revenue miles and hours should not include deadhead, operator training, school bus or charter services, or vehicle maintenance testing. Here you will see a table that illustrates what is revenue service, both miles and hours for demand response. For example, when the vehicle departs the dispatching point to pick up a passenger, this is not considered revenue miles and hours. However, on the third row of the table, when the vehicle arrives at the pickup point and waits for the passenger, this would be considered vehicle revenue hours. This next table outlines examples of revenue service for a bus mode. When the bus is traveling on its route during scheduled revenue operation, this will be considered vehicle revenue hours and revenue miles, even if passengers do not board the vehicle. On the fourth row, there's an example of deadhead. Once the bus arrives at the end of the route and deadheads back to the storage lot to park, this is not considered revenue service. You can reference these tables for both demand response and bus in the policy manual starting on page 69. Unlinked passenger trips represent the total number of boardings on your agency's vehicles while providing public transit. This should be the total boardings for the entire fiscal year that you are reporting on. The last section of the RR20 form is the safety data section. You will report any reportable events that meet one of the following criteria: an event that results in a fatality, an injury, 25,000 or more in damages, a collision that results in the towing of a transit vehicle or another vehicle involved, or an evacuation for life safety reasons. Fatalities should be reported if they occur within 30 days of the event, and injuries are reported when passengers are transported away from the scene for medical attention. Now we will cover common validation issues with service data. The first is reporting scheduled hours or available service hours instead of actual revenue hours. You should report actual vehicle revenue hours and not scheduled hours. A second common validation issue is reporting vehicle revenue miles based on an average route distance. Agencies should be tracking actual revenue miles, not calculating an estimate. A third common issue relates to deadhead. Agencies should not include deadhead in annual vehicle revenue miles or annual vehicle revenue hours. Deadhead includes the time and miles while leaving the garage to go to the first point of revenue service, returning to the garage from the last point of revenue service, or any time the driver does not have the duty to carry passengers. If you have questions about what to include in your service totals, please contact your analyst for further guidance. Now I will hand this back over to Jason to discuss the FFA 10 form.
And just as things are being handed over, I want to remind everybody that we will go ahead and export that Q&A and send it out to folks after the session.
All right. Thank you, Brandon. Thank you, Erica. Next, we will cover the Federal Funding Allocation Statistics FFA 10 form. On this form, you will report vehicle revenue miles, vehicle revenue hours, unlinked passenger trips, and operating expenses broken down by each UZA that you serve. You will complete one FFA-10 form for each mode. The UZAs will populate based on your agency's DB10 form. If you provide service within one UZA or one non-UZA, you will report all of your service to that area. If you operate more than one area, you will report all of the data statistics for that route to that UZA or non-UZA that is primarily served. Or you can allocate the data statistics proportionally to the UZAs and non-UZAs served. For further information on serve rules and allocating to different UZAs, please refer to the NTD serve rules in our policy manual. Here, you will see an example of an FFA-10 form with one UZA. There is one column to enter all the data. Here is an example of an FFA-10 form with two UZAs. There will be two columns to report your data, one for each UZA. You will see on the left side of the form each data point that you will report: vehicle revenue hours, or VRH, unlinked passenger trips, or UPT, vehicle revenue miles, or VRM, and operating expenses, or OE. You will first select the UZA reporting method. There are three options: actual data, actual vehicle revenue miles, or other. For actual data, this means your agency tracks 100% of VRH, VRM, UPT, and OE between all the UZAs that you serve. Actual vehicle revenue miles means that your agency only tracks VRM operated in each UZA. The system will automatically allocate the remaining data points, such as VRH, UPT, and OE, based on the VRM data that you report. The last option, other, means that your agency used another methodology to track data between UZAs, and you must provide a description of this method. If you select actual data, you will need to manually enter the values for VRH, UPT, VRM, and OE into both UZA columns. If you select actual vehicle revenue miles, you may only report VRM to each UZA. The other data points will automatically be allocated. You will report the amount of VRM in each UZA column. If you select other, allocate your data accordingly and then provide a description of your methodology. And the last form you will see in your report package is the CEO certification D10 form. This form should be completed by your agency's CEO. You will first need to confirm the accuracy of your NTD report. Next, you will confirm that all your reported data is in accordance with the NTD policy manual and the Uniform System of Accounts. Now you will review the criteria listed in options A through G and ensure that data meets these requirements. You will select yes or no for each mode operated. Next is the section of the D10 that pertains to the Independent Auditor Statement for Financial Data, or IASFD. You will first indicate whether or not you have an existing IASFD within the last 10 years. If you completed one last year or have one from the last 10 years, you will select yes to the first question and proceed to the next section. Please note that this was a requirement in 2018. If you received a waiver in 2019, your IASFD is required for the report year 2020. If you do not have an existing IASFD, you will indicate whether or not your agency has a waiver for this audit for the current year. Then if not, the last question will appear and you will upload your newly completed IASFD document directly into the system. You will need to enter the date it was completed and who it was completed by. If you have not completed your audit, please select no to the first three questions on the screen and then enter an anticipated completion date in the explanation box. This allows you to explain why the audit has not been completed yet and when your agency expects to have it completed. Lastly, you will review the data collection method for unlinked passenger trips. There are several methods, the most common being 100% count of unlinked passenger trips. The other options are an alternative sampling method, the NTD sampling method, APC data, or none of the options listed, which you would provide a description for. Please note, most reduced reporters do not sample for UPT. If you are unsure of what method to select, consult with your analyst for guidance. Once you've determined the method that your agency uses, you will select the choice from the drop-down menu. If using any automatic passenger counter or APC data for UPT for your modes, please check the Used APC Data checkbox, which is a new field this year. This is the last section of the D10 form. Now we will cover how to submit your agency's NTD report once the forms are completed. Please note that completing the forms in the report package or completing the CEO certification D10 form does not submit your report. Once the report is finalized, navigate to the report package summary page and select Related Actions. Please note that only the CEO or CEO delegate may submit the original submission, which is the first submission of the report. The NTD contact may submit all subsequent reports during the revision process. Once Related Actions is open, select Submit Annual Report Package. If the report is complete and there are no outstanding issues with the data, you will be able to confirm the report package submission by clicking Continue. Once the report is submitted, you will receive a notification that says Action Completed Successfully. You can confirm that the package was submitted if the package is listed as In Review rather than Working Data on the report package summary page. And lastly, we will cover the validation process and what happens with your report after you submit the original submission. Your assigned NTD analyst will validate your completed report for any deviations from the reporting requirements, missing data, or data irregularities. This includes whether the data fluctuated significantly from the prior report year, if any forms do not contain all of the necessary information, any data elements were reported to the incorrect field. Prior to submitting the report, agencies may take advantage of their resources to reduce the time dedicated to report validation. This includes contacting your analyst prior to submission so that they may review your data in advance. You may also refer to report checklists included in your welcome packet, which contain common validation errors and other items to look out for before submitting. It is typical for a report to go through a few revision cycles before being closed out. Your analyst will almost always return your original submission for data revisions or clarifications. Once the report is ready to be sent to FTA for approval, it will either be sent as a clean closeout, which means there are no issues with the report, or it will be closed out with issues, which mean there were some outstanding issues that could not be resolved prior to the report closeout. The issues are cited in your closeout letter, and your agency will be expected to resolve them in the following report year. Looking ahead to 2020, you can expect a welcome email from your analyst as your due date approaches. This email will include a packet containing helpful tips as well as the reporter checklist. Your analyst will also provide guidance in completing, submitting, and validating your report until it is closed out. Please do not hesitate to reach out with questions. Thank you very much for tuning in. Again, here is the contact information for the help desk line. We're open Monday through Friday from 8 a.m. to 7 p.m. Eastern. We could now open up for questions.
Great. Thanks so much, Jason and Brandon. There is one open question here, and I know that there were a lot of answered questions, so just want to let you know we will send those Q&As out to people after the session. For right now, Mike asks, when a report is validated by the analyst, will deviations in UPT, VRM, etc. have more tolerance because of COVID?
I believe the answer to Mike's question is yes. There will be more, the tolerance will be adjusted for these specific categories such as UPT and VRM, but I'm not sure how much, but they should be adjusted somewhat, so yes.
Okay, great. And yes, I'll go ahead and put another link to the handouts. If anybody has any trouble accessing that link for the handouts, if you want to go ahead and chat me in the chat box, I can go ahead and email it to you if that's easier. But yes, I'll go ahead and put a copy of the presentation now. All right. So I'll give people another moment or so to put in any questions that they might have, and I'm going to go ahead and paste the link again in the chat box so you can access it. So you should be able to access the handouts there. It looks like those are all the questions for right now. So I think we will wrap things up. I'm going to go ahead also and put my email address in the chat box. So if anyone did have any issues with opening the handouts, you can go ahead and email me and I will try to resolve any issues that you do have. All right. So if those are all the questions, then I am going to just go ahead and thank everyone for participating in this webinar, and really a special thank you to Jason Kaspick and Brandon Parker for this very informative presentation. And just a reminder to all participants, you will be receiving an invitation to fill out an evaluation for this event, and as I mentioned before, I'll go ahead and export the Q&A so that everybody has that as well. So please fill out the evaluation. We really appreciate your feedback, and thank you so much for joining us today. And again, if you had any issues accessing the handouts, I put my email address in the chat, so go ahead and email me and we'll get things sorted out for you.